Good morning. US stocks staged a recovery on Wednesday after the steepest sell-off in 3 months on Tuesday, with all three Wall Street benchmarks vaulting higher in the wake of news that a framework for an agreement on Greenland had been reached, averting the possibility of new US tariffs on European allies. We have formed the framework of a future deal with respect to Greenland and in fact the entire Arctic region, US President Trump wrote on his Truth Social platform. Based upon this understanding, I will not be imposing the tariffs that were scheduled to go into effect on February 1st. Addressing world leaders in Davos, Switzerland, Trump earlier said he was ruling out military action, but argued no country other than the United States can guarantee security for the Danish territory, which he repeatedly referred to as a big piece of ice. At the close of trade on Wall Street, the Dow Jones Index rose by 589 points or 1.2%. The broader S&P 500 Index gained 79 points or 1.2%, and the tech-heavy Nasdaq Index added 270 points or 1.2%. The bounce follows Tuesday's rout when all three major US indexes sank nearly 2% after Trump warned new tariffs could hit European allies unless the US is allowed to buy Greenland. Following a cross-asset slide dubbed by some as a revival of the Sell America trade amid geopolitical risks, almost 400 shares in the S&P 500 index rose on Wednesday. Small caps beat the US equity benchmark for a 13th straight day, with the Russell 2000 index up 2%. The CBOE Volatility Index, or VIX, dropped to around 17 points from its mid-November highs touched in the previous session. All S&P 500 subsectors were in the green, led higher by energy shares, which jumped 2.4%. Shares of oil services company Halliburton advanced 4.1% after earnings beat estimates, while EQT Corp and Expand Energy advanced 6.5% and 4.5% respectively as natural gas prices hit a 6-week high on cold weather. A burst of strong results from small and mid-sized lenders sent the KBW Regional Banking Index up 4.7%, hitting its highest since December 2024. Citizens Financial Group surged 7.1% on the back of a 31.7% jump in quarterly profit. US mega caps, which were at the forefront of the sell-off on Tuesday, regained ground. Nvidia and Alphabet rose 2.9% and 2% respectively. Intel shares jumped 11.7% to the highest since January 2022 amid a broad rally in semiconductor stocks after Nvidia CEO Jensen Huang talked up the need for trillions of dollars more in computing infrastructure spending. The Philadelphia Semiconductor Index rose 2.4%. Among earnings-driven moves, United Airlines rose 2.2% after the carrier issued an upbeat outlook for the current quarter and the full year. Johnson & Johnson dipped 0.1% despite forecasting 2026 sales and profit ahead of Wall Street estimates. Shares of Netflix slid 2.2% after the streaming giant posted weak first quarter guidance. Kraft Heinz fell 5.7% after a regulatory filing showed Berkshire Hathaway may shed 27.5% stake in the consumer company. Data compiled by Bloomberg showed about 81% of S&P 500 firms have beaten fourth quarter profit expectations so far. However, their shares have trailed the benchmark by an average of 1.1 percentage points, the worst relative performance across data going back to 2017. US government bond yields fell on Wednesday, pulling back from multi-month highs reached in the previous session after a steep sell-off as a recovery in Japanese government bond yields helped steady global fixed income markets. Japan's benchmark 10-year government yield fell after reaching a 27-year high on Tuesday. US Treasuries got a bid pushing yields modestly lower after US President Donald Trump withdrew a threat to impose tariffs on a number of nations, saying he had reached an agreement on a framework of a future deal on Greenland with NATO. In US economic data, contracts to purchase previously owned homes or pending home sales unexpectedly plunged 9.3% in December, hitting a 5-month low, as worries over the labour market and a persistent shortage of entry-level houses offset lower mortgage rates. The US Treasury sold $13 billion worth of 20-year bonds at a yield of 4.846% into strong demand. The US 10-year Treasury yield fell 5 points to 4.25%, and the US 2-year Treasury yield slipped 1 point to 3.59%. European share markets closed flat on Wednesday after US President Donald Trump softened his rhetoric around the acquisition of Greenland. The continent-wide FTSE Russell 300 index fell 0.1% as regional bourses and and sectors finished mixed. Insurance stocks were down 1.7%, with Admiral Group falling 4.1%. Mining stocks jumped 3.7%, with Rio Tinto up 5.2% after the miner beat expectations for quarterly iron ore and copper production. Anglo American closed 4.6% higher, with Glencore up 3.7%. Elsewhere, data published Wednesday showed the annual UK inflation rate rose to 3.4% in December, above forecasts of 3.3% from economists polled by Reuters. The UK FTSE 100 index edged up 0.1%, and the UK's benchmark 10-year gilt yield was flat. In commodity markets, global oil prices settled higher on Wednesday on optimism around tighter supply after a temporary shutdown at two large oil fields in Kazakhstan. The Brent crude price increased 0.5% to $65.24 a barrel, and the US NYMEX crude price rose 0.4% to $60.62 a barrel. The gold futures price rose by 1.5% to $4,837.50 an ounce on Wednesday, as geopolitical tensions, including US President Donald Trump's bid to control Greenland, drove safe haven demand. Bullion rose as high as $4,887.82 an ounce earlier in the session, hitting fresh all-time highs. Base metal prices were mixed on Wednesday, with copper futures down 0.8%, but aluminium futures gained 0.5%. Iron ore futures dipped 0.1% to $106.46 a tonne on Wednesday, as Rio Tinto, the world's top supplier, reported strong iron ore shipments in the fourth quarter. The Australian share market looks set to rebound on Thursday, following a strong night on Wall Street. According to latest SPI futures, the ASX 200 index is expected to open the day 47 points or 0.5% higher this morning, potentially snapping a three-day losing streak ahead of key jobs data. On the data docket on Thursday, the labour force report for December is issued. Commonwealth Bank Group economists expect jobs to have risen by 35,000 in December, reversing November's 21,300 pullback, with a tick up in the participation rate to 66.8%. The unemployment rate could inch up to 4.4% from 4.3%. Overall, we expect the national unemployment rate will continue to trend up through 2026, consistent with our view of a gradually loosening labour market rather than any outsized deterioration. On the US economic front on Thursday, the Commerce Department's Bureau of Economic Analysis is expected to report that personal consumer spending for November rose 0.5%. The US Federal Reserve's preferred measure of inflation, the Core Personal Consumption Expenditures or PCE price index, is expected to have increased by 0.2% in the month of November, while the annual growth rate is forecast to rise 2.8%, still well above the Fed's target of 2%. Separately, the country's third quarter final GDP or gross domestic product is expected on the same day, with the US economy likely to have grown by an annualised rate of 4.3% in the quarter. Procter & Gamble is likely to post a rise in second quarter revenue on Thursday, helped by strong demand for its beauty and hair care products. Investors will watch out for comments on the consumer environment and the company's plan on tariffs, and keenly watch the consumer goods bellwether on its margin outlook for the year. The US dollar moved sharply higher against the euro and the Swiss franc on Wednesday, as US President Trump withdrew a threat to impose tariffs on a number of European nations, saying it reached an agreement on a framework of a future deal on Greenland with NATO. The Aussie dollar rose from 67.30 US cents to 15-month highs of 67.78 US cents and was near 67.60 US cents at the US close. For further developments on today's local trading session, please tune into the CommSec Market Update podcast this afternoon. Thanks for tuning in and have a great day.